This trader in the Relx trading group made over $10,000 this week with this simple trading strategy. No overcomplicated setups, no 10-20 indicators, just one simple line and one simple concept. In this video, I'm going to break down the entire strategy step by step in the simplest way possible. If you're a beginner, you're going to understand this. And if you've been trading for a while, this might actually simplify everything for you. All right, the first thing you guys got to do is go to the indicator tab right here and search up EMA, and then you're just gonna go ahead and add the moving average exponential. When you guys do that, you just go ahead and double click and go down to the inputs and make sure it is on 9, close 0, none, and chart right over here. And the next thing you guys got to do is go ahead and make sure you are on the 5-minute time frame, and this will work the best that I know of on NQ futures. And starting off, okay, you have only two criterias that you have to follow. Number one is you have to make sure the trend is above the EMA. The second component is finding a fair value gap to go off of. Now, this strategy is very, very repeatable over and over and over again. You can use this, okay? Now, why do we have two criteria? One, because we are trying to follow the trend. That is what the EMA is there for. The EMA is not something special. It's not a special weapon or anything. It's just a simple way for our eyes to see which direction to go off of, okay? So if it's above it, we go long. If it's below it, we go short, which is the general idea. Now, once we find the direction of where to go, the second concept is being able to find the entries and take profits, okay? So this is where we combine the EMA line direction. Now, coming in, I'm going to be showing you a bunch of examples on one single day. Then I'm going to be showing you examples from another day, and you can see how repeatable it is for that day. Coming in, very, very simple. Once you have the EMA, you will see that it is going either up or down or sideways. And now what you're going to be looking for is a very good direction going up or very good direction going down. And looking at this chart over here, you can see that this is going to uptrend, which means that we are looking for a long. Okay, that is our sense of direction. And when we have our sense of direction, we then are going to go ahead and look for our entry. So you can see there is a fair value gap right over here. And if you guys do not know what a fair value gap is, it's basically where there's 3 bars and there is a gap between the first and the third bar. You can see there's 3 bars right here with no gap, but there is a gap right here. And you guys can see right over here that we are in an uptrend and there is a fair value gap right over here, and it taps back into the fair value gap. So what you have to do is go ahead and wait until we go in the fair value gap. And the first candle that goes in the fair value gap, I want you to mark the high of it if we're going long. Because then what you're looking for is a closure above that candle. So you can see this candle right here tapped into this fair value gap. And then the next candle was still in the fair value gap, but it closed above this recent candle's high. And once it closes high, it's very simple to just go long and put the stop loss right under the fair value gap. This is going to be the highest win rate possible. And what you can do, you have two different options when it comes to this. You can either aim for a one-to-one risk to reward, or you can just aim for the next swing high. If you're aiming long and if you're aiming short, you look for the next swing low. So you can see right over here that there is a swing high over here that you can easily aim for. Now, yes, this is hindsight. This looks very obvious, but you are never going to be able to get your take profit 100% every single time. These are general ideas. Trading is all just probabilities. Now, you either can aim from this high right here, or you can see that we have a 54-point stop loss, and we can just aim for a 54 take profit. All right, and you can see that this trade would have hit perfectly. Now, coming in, this is the same exact day. Now, what are we looking for? Once again, let's look for the trend, okay? This is a fair value gap right here. We are in an uptrend, and now it tapped into the fair value gap. And what we do is mark out the high and mark out the low of this fair value gap. And if when you get the central direction, which right here is an uptrend, then what we do is we look for the fair value gap, which is right over here. And then what we do is when it taps into the fair value gap, we mark out the high and low. And then we wait, because if it closes above this candle, we go long. If it closes below this candle, we forget about the whole entire idea and we wait for another confirmation again. So now you guys can see that this was a long, but it never closed above the recent candle's high that tapped into fair value gap first. It actually ended up closing below it, which means that this whole idea goes out the window. Now coming in the same exact day, going down, you guys can see now we are in a downtrend. We have a fair value gap right here. It was never tapped. We have a fair value gap right here. It was perfectly tapped. And once it goes tapped in there, you want to go ahead and mark out the high, mark out the low. This closed below, and then you can go ahead and go short with the stop above either the fair value gap or above the 5-minute candle, but I always like going above the fair value gap. And you can aim for a 1-to-1 risk to reward, which would have hit again. Now coming in with the next example, you can see there is a fair value gap right over there, and you guys can see that this tapped in. You mark out the high and low, but it ended up closing above this candle's high. So we throw that whole idea out the window. Now we wait again. This starts to go uptrend. Once there is an uptrend, you want to mark out the fair value gap once again. And you can see that this candle perfectly tapped in there once again. So you mark out the high and low. And you can see how this candle closed above that candle's high, which would have made it long. You put your stop loss under the fair value gap, 76 points, and you aim for a 1-to-1, would have hit perfectly once again. And then you guys can see how simple this whole entire strategy is. I'm gonna be showing you another day. Now coming in, this is the day before. Once again, it is starting to break down. So what do? Go get the fair value gap, and what do you do next? You aim for. And then what do next? You mark out the high and low of that candle. And you guys can see that you go ahead and go short right when that happens. 123 and 123 points, 1-to-1 risk to reward, stop above the fair value gap. And once again, you guys can see that it hit over and over again. And coming in, even that same day from yesterday, it is starting to break down. I do this, find a fair value gap, never hits. There's a small fair value gap in there. That one, the body comes right over here. The closest one, mark at the high and low. This candle never really closed below the low. This one closed below the low. You go ahead and short. Just put the stop above the fair value gap, which is 53 points. You aim for a 1-to-1 risk to reward, and it hits over and over and over again. You do it again right there. These are perfect to catch the trends, and it's as simple as that. I want you guys to practice this. Let me know how it goes. Let me know if you guys want to get access to the Relx trading group. Other than that, we are out.